and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma, and with me as always, Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will open the floor to get all your stock-related queries answered by them. And we'll also focus on the IT space as well as TCS. What's happening on that particular stock, we'll put the spotlight on. But before that, let's have a look at what the markets are up to. So Cheryl, the markets and the benchmark indices as of now, they're just consolidating, but a lot of stock-specific action today.
Absolutely. A very good morning to you, Shrishti. And like you said, markets are definitely in a consolidatory phase. As you can see it on your screen in a short while. There you go. Now we have actually recovered a tad bit from the day's lowest point. Nifty seeing gains of about 30 points or so. Nifty Bank still under pressure. It is seeing a downtick of as much as 90 points as we speak. Nifty Bank was the one that slipped into the negative territory first in today's trading session. If you look at the advance decline ratio for now, a tad bit tilted in the favor of the gainers, with the gainers being HDFC Life that's ruling the charts. 2.7% uptick coming in for HDFC Life. TCS, the other stock that is in focus, we will discuss in depth why actually TCS is seeing that sort of an up move. You have Power Grid, HCL Tech, Titan amongst the other set of gainers. While on the flip side, you have UPL, that's the top loser on the Nifty with downtick of about 1%. Bajaj Finance, Adani Ports, Hero MotoCorp as well as Axis Bank are the other set of losers. Talking about the sectoral indices and what's the picture there, you have the private banks that are taking it a bit easy, but apart from that, Realty is a top sectoral gainer. IT also holding on to good gains, and broader markets are outperforming the benchmark indices. So that's the way how the markets are looking like at this point in time, Shrishti.
Okay, well, let's move on and let's put the spotlight on the IT space and specifically what's happening with TCS, because UBS has come out with a note where they have upgraded the rating on this particular counter, have raised the target price as well. So let's understand what's in store for TCS. And for all of this, Anisha is joining us live in the studios. Hi Anisha, what is UBS focusing on for TCS, and is there any commentary that could actually bring some cheer to the whole IT space?
To the whole IT space, maybe no, because it's very specific to the company. They're talking about how TCS can probably lead the sector growth. So that's their verdict, and they believe that it has more rooms on the upside, and that's the reason they have a buy rating with a target price of 4,700 versus 4,050 that they had earlier indicated. Now, they are expecting that TCS is going to lead the sector in terms of earnings to the tune of 100 to 150 basis points. There is scope of margin improvement as well. In fact, they're talking about margin improvement of 100 basis points over the next 4 to 6 quarters. And that's because the impact of attrition coming down will only happen with a lag effect. And that's expected to bump up the margins. Utilization is another lever that, Samir Seksaria, the CFO of the company, has been talking about time and again. That's expected to play out as well. And overall, the ramp-up of large deals that the company had bagged, whether it was BSNL, whether it was Nest or Aviva, all of that is something that will come into picture in FY25, and that would lead the growth going forward. Now, in terms of the valuations, yes, the stock is trading above its own historical average. If you look at it, it's 26 times, I think, FY26 earnings, 28 times if you look at the FY25 earnings. But the way you need to look at the valuation is compared to the peers as well, because the entire sector has got re-rated. And if you look at the premium that TCS is trading at versus the peers, that has narrowed. So if you take the historic average of the premium, then TCS needs to trade at a higher valuation, and that is what UBS is talking about, and that's why they say that Street hasn't factored that in, that there is not only going to be an earnings lead that will come in from TCS, but there will be a valuation re-rating as well, because the premiums have to be escalated, and that's why they have a target price of 4,700. The stock is clearly reacting that 2% higher, but the rest of the IT pack, barring maybe a Persistent and a couple of other names, are still in the red. And the recent commentary that I've read from the other analysts as well, who are talking about the sectoral takeaways, it's nothing incremental positive, it's more of status quo, and that's been the case for the last 2 to 3 months. So just waiting back to hear anything positive, but for now it's status quo on demand, but individual names can do differently.
Absolutely. I think UBS has made it a tad bit easy for you while you're penciling in or making your estimates for TCS Q4 earnings, isn't it, Anisha? But UBS, there you go, upgrading TCS to a buy rating, raising the estimates, and the stock is actually liking it, or the investors are liking it. The stock is trading higher by about 1.8%. But what should you do with TCS in your portfolio if you're already holding? Then which side of the fence that you should tilt when it comes to TCS? And if you're not holding, then is this the right price to go ahead and purchase the stock? Let's bring on board our experts for today. We have Kush Bora, who's joining us on the technicals. We'll have Rajesh Agarwal joining us shortly on the fundamentals. Kush, since you're there, let me ask your take coming in for TCS. How is it looking on the charts to you? Because we know that the IT pack has been taking it a bit easy. They have been in a very, consolidatory sort of a phase or so, you could call it. Where do you see TCS headed from here on, and what's your outlook for the entire Nifty IT pack?
Hi, first up, a very good morning to you and to all the viewers. Well, if we speak about TCS particularly, then these are the levels that the stock had seen last somewhere in, mid or end of 2021, 2022. If I look at the chart across time frames, then it's a beautiful setup across time frames. From a monthly perspective, the stock is completing a rounding bottom formation, and it's given a breakout. 3800 to 3950 was a bit of a resistance zone. That was the threshold. The stocks trading comfortably above that. I think from a near-term perspective, this momentum could very well continue. Even on shorter terms, if you see, the stock has regained its 20-day moving average and is sustaining above that. So from a near-term perspective, I think 40 to 50 and 4400 are rather convincing targets on TCS. If you have an existing position and that's from a long-term perspective, then very clearly hold. If you're looking to enter, this is a good time because the stock has gotten the much-needed shot in the arm and is starting to rally upwards. Although there could be a small hiccup and a small consolidation along the way, but I think structurally nothing's too bad about it. So as I said, for a positional target of 4400 and with a stop loss of 3900, TCS is still a buy even at current levels.
Okay, still a buy at current levels. The stock is offering a good entry price point at this point in time. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back, and then we'll have the fundamental take as well on TCS.
Welcome back. You're watching Buy Now Sell Now on ET Now. In a short while from now, we'll have Rajesh Agarwal also join us, and we will take his view definitely on TCS and what does he make of that particular counter, given the fact that you have UBS that has come up with a note. They've upgraded TCS. They have not only upgraded TCS, they in fact have gone ahead and raised the target price for TCS, as well as they've raised their earnings estimates as well for that particular counter. And as you can see, TCS is seeing an uptick of about 1.8%. Short while ago, you had Anisha that actually outlined what UBS was saying on TCS and did mention the fact that most likely this would be UBS's note on TCS is very company specific, so we may not see that sort of positive trigger actually go ahead and impact the rest of the IT pack. You have Kush, who said that yes, this is a stock that you can look at current levels as well. But Rajesh will be joining us shortly. But before that, viewers, this is a show where we get you answers for all of your stock related queries. You can write to us on the WhatsApp number that is flashing on your screen. Do remember, each time you write to us, you mention your name, your stock that you're looking to invest in. If you're already invested in the stock, mention the buy price, the quantity, as well as the time horizon, because in that way, our experts will be able to help you better. And also come next week, we will be having a special Women's Day episode for all the women investors out there and all of our viewers, especially who are women, who have been writing to us day in and day out. Do leave a hi today so that we can actually get in touch with you and post the show and actually take this forward. But now we have Rajesh Agarwal joining us on the show. And Rajesh, yes, I've actually gone on overdrive mode when it comes to TCS, waiting for you. I'm happy to know that even Calcutta also has traffic jams, and it's not just us Mumbaikars who suffer from it day in and day out, isn't it?
I really, I'm sorry what has happened today, and you are happy. I was just so stressed out there.
No,
Anyways,
it's a bittersweet joy, right? It's like, we are not the only one who suffer here every day with the traffic jams in Mumbai, isn't it? That too at this hour. Yes, Bombay is, it's impossible to reach destination at this point in time if you start even 2 minutes late, isn't it? But TCS, you think that even if you are late to invest in this counter, you will still arrive at the right destination on right time?
yes, of course, I think so. Maybe not in the right time because of traffic jam that's everywhere is there, but still, TCS can be a right vehicle to ride for a longer term portfolio. Not to forget the kind of balance sheet it has, the kind of order inflows it has shown in the recent quarters. I think it can be bought for a longer term horizon, and it gives good dividends, come out with buybacks every year or so. So for a longer term investor, yes, it's a good buy at around 4,000 odd rupees. I don't think one should have this in his one's portfolio.
Okay, so that's the fundamental take coming in on TCS. But with this, viewers, let's kickstart taking all your stock-related queries on the show then. And we have a lot of queries that have started trickling in. And the first query that I have is on Fortis Healthcare. And Kush, why don't you help Mohit with this query? Because he is holding 350 shares at a price of 270 rupees. His time horizon is for the next 2 years. Any levels to watch out for?
Sure.
Fortis Health.
Well, if you look at the weekly and the monthly setup, then the stock is actually in a bit of an uptrend. The stock's actually done well. From a daily perspective, however, the stock is in a bit of a consolidation mode. So just putting these 2 3 factors together, the idea is to buy this stock because after a fair bit of run, the stock's actually now consolidating and getting ready for the next leg of up move. So if the horizon is anywhere, as you said, from 18 to 24 months kind of a horizon, not a bad idea. The stock could very well touch 500 plus kind of levels in the coming months and a couple of years time. I'm sorry, time frame. So if you don't have a position, you can very well enter at these levels. Stock consolidating is a good time. 400 and a little below could be your stop loss. But from a long-term perspective, I think it's okay if you keep a slightly deeper stop loss and aim for targets of 500 and above.
All right, let's shift focus then and take this query coming in from Pawan, who's writing to us. Okay, Pawan is having some audio issues with our feed. We will get that checked. This one is coming from Patrick. He's writing to us from Mumbai. He has 500 shares of Avanti Feeds, purchased at levels of 490 rupees per share. He wants to know whether he should continue to hold on to this, sell, or switch to another counter. He's a long-term investor. Rajesh, if you look at Avanti Feeds, I believe in the budget also this one actually got a flip with one of the announcements. But on the longer term, do you think it's a good bet to stay with? Patrick already has this at 490. He is enjoying some healthy set of profits on this one.
See, I would advise partial profit at this point of time because I think the entire positives has already been discounted. Whatever came in the budget, whatever were in the numbers had already been discounted. But it would be prudent to book profit at this point of time. Maybe switch to some other counter, maybe a Geo Financial or a HDFC Bank would be a better choice for a longer term horizon.
Okay, moving on then, and Rajesh, what will be your advice coming in on Whirlpool? Because we have seen block deals happening, even the Whirlpool global CEO commentary is not that positive, but Arun wants to know at this point in time, can he go ahead and make an investment with the next 3 years investment horizon?
See, the numbers were not that good, and now when the promoters have said that they are going to exit fully, things doesn't look that bright at this point of time. Maybe some more amount of correction is overdue in this around 15-18% odd. That's around 1,050 odd levels. I would suggest one can have a look for going long, but not at this point of time.
Okay, this one is coming from Sushila, who wants to know about IDFC Limited. Has it from the levels of around 119 rupees per share. Wants to know about short-term targets for IDFC Limited, Kush?
Sure. So the stock's actually very close to her buying price. A mild uptick here. Consolidating, I don't see a very big breakout coming through. So she could look for levels of 124, and once that is taken out, about 128. But I would advise a strict stop loss close to about 116 kind of zone. That's a support zone. If that breaks, the stock could fall lower, and it's not participated in the rally per se. So for very small targets of 124 and 128, she could be in this stock with a stop loss.
Okay, moving on, and Rajesh, Lemon Tree is one such counter which is indeed on the expansion spree, and Karan is already holding 500 shares from a price of 80 rupees.
See, tourism as a sector is booming, I would say, be it religious tourism, be it vacation, be it business tourism. Everything is on a boom. You can see the kind of crowd on airports or railway stations and all those things. As far as hotel industry is concerned, there is shortage of room rent, inventories are low, average room rent has gone up. Lemon Tree is in expansion mode. One can continue to hold but for a longer term horizon, like 5 years down the line, I think one needs to be watch every quarter numbers. A better bet for a longer term horizon would be Indian Hotels or EIH at this point of time.
This one is coming from Vishal. He's writing to us from Dubai. He wants a combination view of both fundamental and well as technicals. He has Prince Pipes. The buy price is 679. He has Divi's Laboratories at the buy price of 3,981 rupees per share. He's saying he's holding both of these counters since the last 2 years, but now he wants to know, are they both fundamentally intact for him to stay put in the counters, and also what sort of a level that he should watch out for them? Do you think that these stocks offer good margin of safety, Rajesh, given the fact both of them are way off his buy price, Divi's Laboratories as well as Prince Pipes?
See, I think both are a hold at this point of time. First, let's come to Divi's. The API business was in a bad shape, and not only Divi's, the other API players also saw a massive cut in their market cap. And now things have started turning around. We have seen in this number, this quarter number, that things were slightly positive from what they have been. And with new launches and all going forward, I think Divi is going to do well. Even Prince Pipe, that has not done quite well in the recent past, the numbers have been satisfactory, I would say. And going forward with the kind of infrastructure boom and all, capex and all, I think Prince Pipe can also do around 10-15% upside from the current market price in the next 2 quarters. So both of them are hold from us.
Both of them are hold when it comes to Rajesh. But Kush, what's your take? Are they a hold for you as well? Both Prince Pipes as well as Divi's Laboratories. For the last 2 years, he's been holding on to it, and now he's not definitely making profit in both of them. What should his targets be for the short term or to the medium term?
So I was going to suggest an exit, but given what Rajesh just mentioned, I'll probably put it a little differently. See, both the stocks have been under pressure, and there have been constant selling at at every rise. So from my perspective, these stocks don't for sure warrant any kind of fresh averaging or any kind of fresh money into them. Uh, Combining Rajesh's view, the one way he can hold on to these is with strict stop losses. So DVs, for example, has a strong base or rather a strong support zone at 35-30 kind of levels, not too far from the current levels. So if that were to break, then the stock could slide further, all the way perhaps to 3,300 levels. So not too far, but 35-30 is where I would place my stop loss. If that is taken out, then exit. Prince Pipes also very similar. It's close to its support zones. So 580 is where I will place my stop loss. If that is taken out, then the stock could slide further to about 540 levels also. So even if you want to hold on to them, give them a last shot at a rebound, then hold on to these both these stocks with the support and the stop losses mentioned.
Then, and Kush, once again coming to you, what will be your advice on HDFC Bank? I know everybody is bullish about it, but Swati is holding 450 shares from a price of 1470 rupees, and she can still hold for the next 1 year. So any targets to look out forward to?
Sure. In fact, this has made our life easy because there are so many queries, and then a stock like HDFC Bank is always under check, and more so now. So I don't see any kind of an issue from here on. The risk-reward ratio on HDFC Bank from here on is extremely favorable. It's a different story that the stock is marginally down from her buying price, but still, if you look at the support zones, they come in at 1380, 1350 kind of levels. But on the upside, if the stock were to rebound from here, you could very well see 1520 and 1600 kind of levels, in the coming year, maybe even higher. So from a risk reward standpoint, the stock is beautifully placed. My suggestion would be to hold on to this one with 1350 as a stop loss, and the upsides could, as I said, be 1600 and well above those in the in a 12 months time frame.
All right. This one has come from Dr. Subaya. He's writing to us from Tamil Nadu. He has 25 shares of Gillette at a price of 6,400 rupees per share. He has 20 shares of Venky's from the levels of 2,200 rupees per share. He's saying he's suffering huge losses in both of them combined. So he wants to know if he should look at exiting both of these counters, Gillette as well as Venky's, and where else can he actually go ahead and look to park that money. What's your take coming on this, Rajesh? Venky's as well as Gillette. Fundamentally, do you think he should hold on to it for some more time, try to recover some losses?
See, as far as Venky's is concerned, I think one can switch from this to, as I said, Jio Finance, HDFC Bank, or Reliance. But for Gillette, I would say continue to hold. The numbers have been good. The balance sheet is very strong. The products are doing very well. The only problem with this counter is low liquidity, but since you are a long-term investor, I don't think liquidity should be an issue for you. It has underperformed the market, no doubt on that. But going forward, I think the kind of fundamentals it has, it warrants a hold. So I would suggest a hold on Gillette.
Moving on, and Kush, coming to you for two queries by Epiram. He's holding 60 shares of Asian Paints and his buy price is 2,970 rupees. He's at a mild loss in this one, and he also has some losses in Tata Chemicals. He's holding 160 shares at a price of 1,010 rupees. Can he buy more at current market price to average out or to increase his exposure in both of these names, or would you advise to move out at some rise in the stock if we get to see them?
So the good thing about Asian Paints is that his buying price is fairly close. The stock is actually below that as well. But my suggestion would be, again, from a risk reward standpoint, purely Asian Paints has actually become quite attractive. Although technically it does remain under pressure, and it could see further downside, but that could be limited from here on. So an Asian Paints right now would be a hold with a stop loss of 27.75. The only thing is that the stock's not actually shown any kind of rebound attempts. Hence, I wouldn't advise any kind of averaging here. As far as Tata Chemicals goes, again, my suggestion here would be an exit, because every rise has been taken as an opportunity to sell. There's a base close to 960 kind of zones, which is very close to where the stock is right now. Once that is taken out, it could slip to 920 also. So Tata Chemicals hold with a tight stop loss of 960, and Asian Paints also hold with a stop loss of 27.75.
All right, on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking a query, viewers, so don't go anywhere.
Welcome back to Buy Now Sell Now, show where we get you answers for all your stock related queries. And continuing the same, the next query that I have, Rajesh, is on Navin Fluorine. Madhusudan is holding 50 shares at a price of 3,600 rupees a piece. He's a long-term investor. What will be your advice in this chemical counter?
And if it falls by around 10% from the current market price, it's a add from our side. The numbers have been quite well. Chemical industry as a whole has not done quite a lot in the recent past, and I think things are turning around. Fluorochem business is doing well. I think one can continue to hold the stock, and if it falls around 2,800, it's a buy from our side.
This next one is coming from Anjana, who's writing to us from Dubai. Kush, she has 11,000 shares of JP Power. She's purchased that at the levels of 20.7 rupees per share. 1,000 shares of City Union Bank at around 147 odd rupees. What should she do with both of them? Average or hold on to them or exit?
So, well, JP Power is a hold. The stock had seen a sharp run up, and now seeing an exactly opposite reaction of sharp slip up. I think 1750 to 17 rupees. That's a good support zone. So she should hold on to this one with that kind of a support zone. It's below her buying price, but there's a possibility that the stock could see rebound from those levels. So JP Power is a hold. Definitely no averaging here. City Union Bank, well, again, it's been under pressure for a while, barely holding on to its 200-day moving average. So this one also will be a hold, but with a strict stop loss of 130. Again, no averaging suggested here, because the stock's not seeing any kind of a fresh buying or any kind of a momentum here. So hold for both of these stocks. For JP Power, 17 is the stop loss, and for City Union Bank, 130 is a stop loss.
All right, moving on then. And Rajesh, the next query that I have is coming from X, the social media platform. And Gajanand is written to us on two counters. Firstly, he wants an advice on TV18 broadcast. He has purchased 450 shares at a price of 40 rupees, and he also has Network 18, 200 shares in quantity from a price of 36 rupees. Sitting at good profits in both of these names. Any long-term view to share and what to do in these names as well?
See, both are a hold. Merger of both of them have been announced, and it's just a matter of time that the merger actually takes place. And before the merger, if by any chance TV18 goes to around 80 odd rupees, then it's book profit at those levels. But at this point of time, both are.
Moving on, this one is from Balaji. He has Whirlpool, 50 shares of, at a price of 1450 rupees per share. Should he average right now or book loss, or should he hold? He's saying he can hold on for another year or so. What's your take on this one, Kush? Because a lot of news-specific action also is taking place in Whirlpool. You also had that particular block deal that took place. Then you have a note that is coming on Jefferies, which is downgrade the counter. That is also having an impact on the stock. But for the next 1 year, makes sense to stay put or just book out losses?
No, book out losses. That'll be the advice. It's not seen any kind of buying emerge. Rajesh also had a quick comment on this one a while ago. I think technically and fundamentally, I think there's a very clear collaboration or a merger here where the view comes out, which is an exit on Whirlpool.
Moving on then, and Rajesh, amongst the banking names of Maharashtra Bank, IOB and Dhanlaxmi Bank, any of the stocks that you like at this point in time to start with an SIP investment? Naman Deora is, what's your advice in these banking names?
See, out of these three, I think Bank of Maharashtra stands out because of the numbers. Not only this quarter numbers, because of the last 2-3 quarters numbers, the numbers have been excellent in many of the parameters. It is one of the best PSU mid-sized bank, I would say. Net NPA is around 0.28, 0.3. Capital adequacy ratio is good. The numbers have been pretty good. Bottom line has been going up by 30-35% in the last 3-4 quarters. I think it can touch 75 odd rupees the next 1 year or so. As far as doing SIP and all is concerned, I think one should consider larger names like HDFC Bank, which is at a very good valuation at this point of time for doing a SIP. But still, if you want to go for mid-cap PSU names, Bank of Maharashtra stands out.
All right. This one is coming in from Puneet, and he wants to know about Alkem Labs. He has 20 shares at a price of around 550 rupees per share. He wants a short-term target on this particular counter. Of course, this one also is marred by a news flow actually, and that's the reason why yesterday the stock actually tanked in trade. Right now, if you look at it, the stock is also taking a bit easy. What's your take on this one? Alkem Labs short-term targets?
550. I'm assuming the price is 5,050. If that's the case, then
it's 5,050. I'm very sorry. 5,050. Yes.
Otherwise, it would have been some investment, right?
Yeah, absolutely.
Well, no. The stock. What we've seen is just a reaction for a day, and the stock actually starting to recover. Structurally, I don't see too much of a damage here. The stock, as I said, after yesterday's fall, is showing signs of recovery, which means the buying here is pretty evident. Even then, a prudent strategy would be to hold with a stop loss. 4950 is where I would place my stop loss. The stock very close to his buying price, which is a good thing. So an upside from here will actually, make him some money. 5200 is my near-term target on Alkem once that is taken out. 5350. So after the fall, the stock steadying ship is a good sign. Hold on to this one with a stop loss of 4950.
Okay, moving on then. And Kush, what will be your advice coming in on NMDC? The stock is trading ex-dividend today, and Sunny just yesterday bought 200 shares at a price of 237 rupees. What's the short-term outlook on this one?
Well, the stock was anyway seeing some divergences, and it would have been a good idea to book profit and take some money home. Since he's bought just yesterday, maybe he can hold on to this for some time, say for a stop loss of 220. But otherwise, I wouldn't recommend any fresh entry, on this stock yet till it shows any kind of, a rebound attempt. As I said, it was already showing some divergences, and we are seeing some sort of profit booking. Even if we take out, today's ex-dividend action, the stock was under a bit of a pressure. So 220 is my stop loss. I'll hold on to this stock with a 220 kind of stop loss. If that holds, then my near-term targets are 238 and 245.
Right, this one is coming from Nishi from Bangalore. She has 11 shares of Bosch, purchased at 16,009 rupees per share. Rajesh, this one is for you. She wants to know whether she should stay put with Bosch or look to book out profits on this particular counter. The stock is trading at 29,000 now. Her buy price around 16,000. What's your take? Bosch, do you think that there are more triggers for this one to move ahead, given the fact the presence of Bosch in critical sectors?
See, not only critical sector, but also it's an ancillary play. And this is a kind of stock which one can hold for years together, maybe decades. So it's unless you have any need for money, just because you are sitting on a profits, no point selling this stock. Continue to hold.
That's a hold coming in on Bosch, but with this fears, it's time to slip into a very short break.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your query. This one is coming from Kiran Kurhade, who's writing to us from Pune. And she wants to know about Ujjivan Small Finance Bank. Kush, she purchased at levels of 58 and Utkarsh Small Finance Bank at 52 rupees per share. She wants to know whether she should move out of both of these counters and instead look at counters like AB Capital or RBL Bank. What's your take on both of them? Utkarsh Small Finance Bank, Ujjivan Small Finance Bank.
Well, actually, both of them have been, under a bit of pressure. I know, a bit of a loss on these names, but actually, it's a good idea to shift to something like an AB Capital, which she's considering. The stock's actually seen a breakout and a fair bit of follow through. So 200 plus kind of levels, can be achieved on this one rather quickly. RBL Bank, however, has been under a bit of a consolidation mode. So, if she is okay with a larger bank, then HDFC Bank perhaps, will make the cut, or a Canara Bank from the PSU pack, but for sure an exit from Utkarsh and Ujjivan.
Moving on then, and Rajesh, what's your advice on Vinity Organics? Philip has already bought these shares from a price of 1,800 rupees, but at this point in time, can he go ahead and buy more at these levels?
It's for me.
Rajesh, for you.
One can continue to hold, but averaging at this point of time is not advised. Let the numbers be show some positiveness, because chemical sector as a whole, we have seen some amount of pressure. Yes, it's trying to recoup from lower levels, but still one should wait for adding some more. Continue with the existing positions. Let one more quarter results come, then we can think of adding more.
All right, this one's for you, Kush. This one's coming from Sagar. He's holding shorts on Bandhan Bank as well as AU Small Finance Bank. For Bandhan Bank, the shorts level is about 235, while for AU Small Finance Bank, it is at 755 rupees per share. He's booked partial profits, but he's asking, do you see further downside in the stocks, or if there's any other better stock available for shorting at this point in time with good risk reward?
Sure. Let's start with the AU Bank query first. Here, the stock is actually attempting a rebound, so it's probably a good idea to cover your shorts and move out of this one. Bandhan Bank, must congratulate him on a good level that he started it at, and also booked a profit along the way. So that's a good trade. I think 200 is more of a psychological level that the stock is holding on to, plus the expiry effect also playing out. I think once that is taken out after this expiry, 192, 190 is the kind of zone that the stock could retest. So continue holding on to Bandhan Bank short position. Fresh shorting, I would not suggest. At the moment, a couple of counters like Bharat Forge are under a bit of pressure, but I wouldn't suggest just yet, because the markets are also attempting a rebound. So if that happens, some of these names could see some short covering. So hold on to the Bandhan Bank short. Fresh shorting, let's just wait and watch how the rollover data pans out, and then we can consider.
All right, moving on, and Kush, once again coming to you, because Shivanshu wants your advice on Sona Comstar. He's already holding around 250 shares at a price of 650 rupees. He can continue holding it for another couple of months. So what any target price to look out forward to? And at this point in time, can he go ahead and add more to his current portfolio?
Well, I wouldn't suggest adding more. The reason is the stock has, a supply zone close to 710 to 730 kind of levels. And that would incidentally also be the target, that he should look at the stock on the upside. These are the levels that the stock has come back to after 2 years time frame. So some exit pressures, will also be evident. The best thing to do would be to hold with a trailing stop loss of the buying price, which is 650 now, and look for targets of 710 and 730.
All right, with that, let's kickstart with the rapid fire. The first one is coming from Sridhar. It's on Asian Paints for you, Rajesh. 30 shares at an average price of 2,892. Do you think it makes sense to stay put with Asian Paints for the longer term?
Continue to hold.
Okay, Kush, what will be your advice on Indus Star? Anu is holding the shares from a price of 220 rupees. In the short term, which levels to watch out for?
Book profits. The stock's seen a run up and then correcting now. Very clearly, book profits are current juncture.
All right, this one is on Valiant Organic, Kush. This one is coming from Santosh from Muscat. His buy price was 797 rupees per share. Stock has seen a sharp downfall. What should be his strategy now?
Exit.
Okay, Rajesh, Shaikh is holding Indian Hotels 100 shares from a price of 423 rupees. He can continue holding it for the next 2 to 3 years. What will be your advice?
It's an ad from our side. Somebody holding can continue to hold.
Alright, Kumar Jeet has IRCTC buy price is 980 rupees per share. Kush, what sort of a target for IRCTC?
1040, and once that is taken out, 1070. Stop loss at close to about 940.
Okay, Rajesh, Nitya is holding JK Papers 1750 shares from a price of 407 rupees at a loss. Would you advise for average or hold?
No averaging, but one can continue to hold. New money, if somebody wants, can put in West Coast paper.
Alright, this one is coming in from a viewer who has Hindalco. The buy price is 525 rupees per share. What's your take on this one, Kush?
Strict stop loss of 495. Once that is taken out, the stock could slip further. So hold with a stop loss of 495.
Alright, Kush, any targets in short term to look out for in First Source Solutions? Subramaniam is holding the shares from a price of 176 rupees.
A good entry point, that's a strong support zone. Hold with a trailing stop loss of 195. On the upside, the stock could, in the current momentum, touch targets of 215 and then 230 also along the way.
Alright, and let me actually try and squeeze in one last one from Mohit, who is writing to us from Mumbai. Samil is the stock actually, Rajesh. He has a 30 shares at a price of 102 rupees per share. He wants to know whether he should book profits or stay put with this for the longer term. However, he wants to stay put with it for the longer term. Do you advise?
You can continue to hold auto ancillary as the pack has started doing well.
Alright then, with this, we are completely timed out in this edition of Rapid Fire session as well on the Buy Now Sell Now show. Thank you so much, Kush, as well as Rajesh, for joining us today and helping all our viewers resolve their stock-related queries. But with this, viewers, it's a goodbye from me. As of now, the markets are still in the consolidated mood, and a lot of stock-specific action is what we are witnessing. But all that will continue with markets at noon, and Cheryl will take this ahead.